Y'all know who it is, man. It's your boy, Wall Street Shooter. What's happening, earners? Hey, how y'all feel about the gang being called earners? You know, if you tapped in a few other videos, man, I was trying to find like a little, nickname for the squad. And before then we had the crypto cartel, and that shit was hard. We still got the cartel for all my crypto heads in the Discord, man. Y'all still the cartel. Stock stock squad, stock La Familia. But I think overall, man, I like calling y'all earners, man, because that's what we striving to be. We're trying to be earners in all these markets, in the stock market, the crypto market, NFT market, mining market. We're earners. So how y'all feel about being called earners? I like it. Let me know. Let me know what y'all think, man, in the chat. But anyway, let's get into it, man. Today's lesson for today is trading flags and pennants and patterns. So identifying flag and pennant patterns, right? These are two of the biggest patterns that I like to identify, right? So many patterns to digest in this trading world. And honestly, the most common ones that you're going to see are bull/bear flags and bull/bear pennants. You're going to see those a lot, and you can spot those on a daily chart, 4-hour chart, 1-hour chart, weekly chart, 5-minute chart. You spot them on all timelines. And once you find patterns that you commonly see and are comfortable trading, those are the patterns that you really just need to kind of stick to. Like, I'm going to try to break this trading down as simple as possible, right? Make this shit simple, stupid, right? Like I said, there's so many different patterns out there. Like if you was to Google stock patterns, there's like at least 17 that's going to pop up. My favorite ones that I like to trade again are flag patterns and pennants. Also like doing cup and handles, but those don't happen a lot. Double bottoms, or inverted double bottom, or double top, inverted double bottom. That would be a double top. Are patterns that I enjoy trading on. Head and shoulders and inverted head and shoulders as well. But I just keep it really simple, stupid. Flags and pennants, especially when I'm scalping and I'm in a smaller timeline, like the 5-minute or 2-minute timeline. You see a lot of these bear or bull flags or pennants present themselves. So I got Amazon up. Amazon's becoming one of my favorite stocks to trade. Premiums are pretty good for us trading options, and decent volatility or decent price action so far. It's been a couple of weeks since Amazon did the 20-to-1 split, so we're starting to get some good data off of her, getting a good idea of how she's going to be trading with this new price action since the split. So overall, the market's still in a decline. We still below the 50, 100, and 200 SMAs. So we still overall in a bear market. As you can see, I'm on a daily. I have my daily trend line here, and we've been selling off in this particular rundown or breakdown since March 29th of this year. So, and in this, we can identify a couple of flags here. So we just want to go back in time, back in history of this little downtrend right here that we are currently in. And we're just going to identify and kind of talk about, some patterns here, as far as like the flags and pennants. So I have some definitions. I don't really want to read it out to you guys, but I mean, just know these are technical flags. Technical patterns, technical price pattern. That's basically shown on a short time frame. You can see it on a daily time frame as well too, but you can also see it on a short time frame. So basically, what is a flag? In the context of technical analysis, a flag is a price pattern that in a short time frame moves counter to prevailing price trends observed in a long time frame on a price chart. It is named because of the way it reminds the viewer of a flag on a flagpole. All right, so we're going to be looking at some flags here. We got a bunch of flags actually on here, a bunch of bearish flags, right? Bearish because we're heading down. Market's heading in a downward motion. The market is very bearish. If it was reverse, heading in an uptrend, very bullish. So we're going to be looking at some bear flags. We got several just from the start of March. So let's just kind of look at it. This should be a quick lesson. So just bear with me and let's get into it. All right. First and foremost, for any flag pattern to happen, we need a flagpole, right? Let me see. Let me share something with you guys. Let me stop streaming. I don't want to share a quick. Let me share this with y'all. Boom. So this is example by definition, right? So here's the bear flag example, right? So we had this flagpole right here. This is the pole, right? Then you have this pullback. Remember when I talk about being overextended for that 9 EMA? I pictured that the 9 EMA was right here in this little space. Most likely this pullback is to find that support. So you got the flagpole, you had a little pullback here, and then a continuation. Now we had a major pullback, in a sense, with a lot of consolidation. You got price action bouncing within this support and resistance and this little channel, and it pulls back, and then we break the support and we have the continuation. A bear flag or bull flag, by definition, is a high success rate of continuation of the current trend. So this is a bear flag, which it could be an indication of a continue of a bear movement, right? That makes sense. So we're already in the down. We got this flagpole created. We starting to consolidate. Volume is slowing down. And then boom, we break out of that bear flag. That's your confirmation that this particular movement is a bear flag. Once we break that support, that gives you confirmation that we're continuing through this bear flag. Now, can price action break and bounce back up? Absolutely. So I'm not going to say it's 100% success rate when you see this particular pattern that was automatically assuming that we're going to keep trading in a downward motion. This could pop out this flag, bounce and shoot back into the flag, and then price gap out, right? Price action is pretty much can kind of do what it wants, but I would say anywhere between 67%. And I'll probably have to get some receipts on that to give you guys. Where you can count on a bear flag showing continuous of that downward motion. You need that downward price action, which is the flagpole. You have the actual flag being created, and then you have that confirmation of proving the continuation of the downtrend. And that's what you got here. So we can look on this chart. So that's a flag. And then in a bull example, obviously is reverse. Price action, here's your flagpole. And it necessarily doesn't have to run up in a straight line like a flagpole, right? Like a legit flagpole. Obviously, price action kind of travels in a sideward motion like a snake or a crab. So you see this is your flagpole, finds this channel between price action, finds the support and resistance, kind of bounce through this little wedge or channel. And then it bounces, pulls out, and that shows your continuation, right? That's a bullish flag. It looks a lot different on different timelines as well, too. So let's kick back over to the chart. Switch to the chizot. So let's identify some of these bear flags. So right off the gate, we got this little area right here. Boom. Let's go ahead and mark this one out. Trend line. Boom. Bow. Bow. We got our flagpole being created, and then we have this price action. We have this price action right here, bouncing in between the support and resistance line. So we got a support here. We got a resistance, right? Our wicks are lining up perfectly. We're getting that little bouncing ball effect here. We didn't pull back from the 9 from being overextended from the 9. We pulling back to the 9 in the 21 EMA. And then boom, price action confirms. You see this strong candle with a lot of volume shooting off of it. We break this support in this channel, and we just got confirmation that we're going to continue on a downtrend. That is a bear flag, y'all. From the example that I just showed you to the actual live chart of Amazon on the daily, this is A plus grade A swagoo setup for puts. Perfect. I mean, chef's kiss. You don't get no better than this. Legit flagpole, consolidate to the 9 and 21, rejection off the trend overall trend, breaks support strong, right out the flag. Perfect for puts. Perfect. This is grade A right here, baby. Grade A flag pattern. Grade A bearish flag. All right, cool. Let's look at some more. And we ain't got to go too far, right? We got this flagpole, this price gap action, that gap down created our flagpole. And this right here is not even a flag. This is actually a pennant. So we created a pennant. What's the difference between a pennant and a flag? Let's get it by definition, right? If we're going to do it, let's get it by definition, you dig? So let's go ahead and switch over. Let's stop sharing. Let's switch over. I'm going to show you exactly this, what a pennant looks like. I'm in the Discord. I'm giving a lesson. Why you not there? That's how you stay on your family, man. Hold them accountable. Why are you calling me? Why are you not in this lesson? Let's get it. All right, so we're looking at pennants, right? Here's an example of a pennant. You got the flagpole, a little different consolidation. You got a strong bounce off a trend. You see it makes a little triangle angle right here. You have the same consolidation. You still have support and resistance and support, and you still have that bouncing ball effect. The thing about it is that, as you can see, you have these big bounces, and then these bounces get smaller and smaller, and then what you get is a tight squeeze and a breakout, right? So this is a pennant. A little bit different from a flag. Obviously, it looks like a pennant. Flags look like flags. Still the same overall structure in the sense of that price action could continue in that direction, or price action can change. But again, around 60, 65, 67%. What I want to say, certain bit. I can't even think what I want to say, y'all. But just know, when you see these patterns, these pennants with the flagpole, and you got that build up right here, what we need is a confirmation to say, okay, we are still in a bearish direction. And so you get that. So we got our flagpole. Let me pull back the chart, live chart here. Boom. All right. So we got our flagpole here, price action gap down. We got continuation off of the 9. And like I always tell you, when we overextended from this 9, we are going to find our way back. May not necessarily hit the 9, but we're going to start creeping back to it. So in this case, we actually created a pennant, right? Got your price action bouncing around. If I was to break this down in a 2-minute or even, let's say, 1 hour. Let's see. Let me find this on a 1 hour. Back out a little. And let's scoot it over. Oh my gosh. What is this? 1 hour. Why I can't pan? Oh, Thinkorswim be tripping sometimes, bro. All right, there we go. That pointer right here. All right. So now you can kind of see it a little bit better, right? So we got the flagpole. You got the bouncing in between, or the consolidation where volume slows down and the price is still trying to figure out the break resistance and support. And once it decides to make a direction, we break that support and we continue on the downtrend. So that's your typical pennant pattern, which bearish pennants provides confirmation that we are continuing on that pattern. It could have broke and went to the upside, but it didn't. Like 67 success rate kicked in. We broke that support, and we continue on the downtrend. So let's go back to the daily real quick. I swear. Hey man, Thinkorswim is cool, man, but these chart resets is like, bro. Just, I don't know if it's just mine or, goodness gracious. I mean, this thing just killed a whole 5 times. Here we go. Anyway, back. All right, so perfect bear pennant with the continuation confirmation candle, continuing on our downtrend, right? And now we're coming up on another pattern. So we had our consolidation. We got a price action coming down. We have price action trying to recover, which it did, get rejected at a level, at a resistant level, and go right back down to a bottom that we've already seen, a previous low here. Actually hits the low. As you can see, we have this W forming. What is this? This is called a double bottom. This is another pattern that I mentioned previously that I love to trade from. You have no double bottom patterns. Double bottom patterns are considered to be reversal patterns. You have double bottom, have double top. So when you get a double bottom, you can expect price action to continue on the uptrend, right? Coming from the bottom, continue to push upward. The success rate of those are a little bit under like 50% because those can definitely crap out. But it's also a good pattern once you recognize it, especially on a daily chart. Something that you can prepare to either play for calls if it's a double bottom or a double top. You can start thinking about looking at puts. So in this particular pattern right here was a double bottom. We have our bottom right here, right? We got our bottom right here, this 103 level. Price action came there twice, came here once, tested it, bounced, found resistance at 115, rejected 115 and found that 103 level again, bounced and went and actually broke this 115. What makes this a double bottom? And this is very important for you to before you get into this, any type of call plays on a double bottom. You see this neckline at 115, right? You got this neckline that's being created. When you get into a double bottom pattern play, you want to make sure that neckline is broken. That's your confirmation to jump into a call, right? Again, shit can change, but yes, you might leave some money on the table from this, but you don't know if this is double bottom or not. Price action can bounce at 115 and shoot back down and create a inverted head and shoulders. So to make sure before you jump into any freaking call on a double bottom, it needs to break this neckline. If you look at this, oh my gosh, bro. If you look right here, this is your neckline right here. From this point right here, from when the price action rejected, came back, that's your neckline. So your entry would be above this neckline. So this candle right here on the daily, that's when you want to get into possible a swing play, long-term hold, whatever the case may be. And what happens, you get this consolidation point. So the whole pattern of a double bottom is that you get this breakthrough for confirmation. It starts to consolidate, and then it should continue. But with the overall market that we're in, it actually found our overall trend line and rejected it and shot back down. So we have pennants. We have a bear pennant. A bear flag here, bear pennant, and then on the daily you have a double bottom pattern here. So different opportunities to trade, right? So these are things that I look for, especially on a daily chart. And if you was in the lesson yesterday, we kind of talked about Amazon, and we had this different, we have this wedge right here that was formed. And we were talking about, and I was saying at 115 would be a good entry. And we're testing the overall trend right now. So I'm kind of curious on what we'll do, especially next week. Are we going to break this trend and maybe start heading into somewhat of a recovery? I doubt it. In my opinion, I think this is just a nice little bear rally from all the clappage we've been catching in the market. I think this is a nice little bear rally. And the reason why, because I know in a few weeks we got CTI coming back out, a review on interest rates for June. And just the overall market is just shitty right now. Like legit in a mini recession, regardless if they say it or not. I believe we're in a mini recession. Could we break this trend line? Yeah, sure. We could definitely break this trend line. But as you can see, this daily trend line that I have here, we got the trend started here. We peaked above it here a few times. We hit it 3 times here and rejected it. We hit it here for a 6th time or 5th time or whatever and rejected it. Now we're here at the trend line now. Will we peak over it? Sure. I'm not going to get excited until we break this 129 high after the split. I'm not going to get excited at all. What I'm thinking, the market has definitely cooled off from its fault, from all the selling off, and the the bulls in here, found a somewhat of a bottom and eating from that. So just be, kind of keep your eyes on these patterns, man. So let's look at some other stocks. Let's look at Tesla. And we talked about this yesterday, so that's why you see some of these blocked out. All right, so we got our flagpole, we got our consolidation here, and then you got your confirmation candle here and here. So this is you guessed it, a flag, bearish flag, flagpole consolidating within resistance and support, confirmation past 977, and then large price action. So if you would have got into this play at 990 and you put on some puts, right, because we broke that candle, and then following day we had a bigger confirmation, you're definitely cash out. Now I do want to let y'all know you do get some fucking fake outs. You do get some fake outs. This candle here, yeah, it broke the trend, but we can easily bounce back into this flag pattern here. And that's a fake out. So you got to be very cautious. So, as you see, we got these swing lows here at 977. Will it be smart to jump into this play without breaking these swing lows? Maybe not, right? Maybe if you want to YOLO it out, sure. But the smart play is definitely getting below these swing lows of 977, which would be the following day where Tesla sold off for, let's see. Oh my gosh, man. Pointer. Thank you. Tesla, let's see. What was the high? High here was $1,000 and low as 875. And it closed at 876 on this candle right here. So this will probably be the better candle to get into. This green candle definitely be a YOLO. But this one gives you more confirmation, more certainty. And then on top of it, after you get this particular flag pattern with the flagpole and the pullback, you get this flagpole, and now you have another flag being created, right? So here's another bear flag, and then confirmation breaks the flag, get back into the play, right? And you just kind of like look for these little patterns. This is what's going to help you just eliminate some of the risks, right? If you trade in patterns, you're not guessing direction. You're trading within the trend of the play, and you're not guessing, because when you start getting into this consolidating, regardless if it's a flag, if it's a falling wedge, rising wedge, pennant, there's consolidation that starts the movement, or that's part of the movement, excuse me. So when you start getting there, it's get a little risky for our trading, because the stock price action has not picked a direction yet, and you are basically guessing at this point. So you're gambling. So you have to have a little bit of patience. Yeah, your friends are talking about, hey, Tesla doing this, and this, and Amazon's doing this and this. You have to go back and look at your chart and see exactly what's going on before you jump into the play, right? Regardless, right? If I may give y'all the watch list, give you the key levels that I'm looking at, you need to go confirm those and make sure that it fits your trading plan, your trading criteria before I'm saying, you know what? Hey, Shooter's been hitting it. He ain't been missing. I'm just gonna follow his lead. Nah, man. No. You have to build your trading plan out. I'm gonna help you guys. I'm gonna show you my trading plan and how I built my trading plan. So hopefully it help you guys build your trading plan so it can fit you and your budget and your trading goals, right? So I want to have more of these little sessions like this, just talking about things that I look for. I like trading pennants and flags. It makes me feel comfortable trading pennants and flags. It makes me, when I get into a play and I see a pennant or a flag, I know what could the outcome be. I feel confident when I see these types of patterns being formed. I like double bottoms. I like double tops. I like cup and handles, right? Like I said, there's so many different patterns out there to trade. You don't need to know all of them. There's a gang of them. Matter of fact, I'll pull it up. I'll show it. I'll show you guys how many freaking patterns it is out here. Stock patterns. Let's pull it up on Google real quick. It's a grip of them. And maybe this is my, there's cheat sheets out there. I know I put it in the stock resource page. If you want to go look at the cheat sheets of different patterns, please go check those out. Let me stop stringing that chart. Let me show you chart patterns. You got bullish continuation, bearish continuation, bullish reversal, and bearish reversal, right? Sending triangles, bullish wedges, bullish flags, bullish symmetrical triangles, uh, bear symmetrical, and a lot of them just reverse, right? You got bulls and bears. So there's a lot of different patterns out here. Boom. Excuse me. Double bottom, triple bottom, inverted head and shoulders, falling wedges, rising wedges. A lot of them just repeat themselves. They just, you invert it, right? So if you got a double bottom and you flip it, it's a double top. You got a triple bottom, flip it, it's a triple top. Inverted head and shoulders, you flip it, you got head and shoulders. Falling wedge, you flip it, rising wedge, right? So they do the opposite of their actual movement, right? Descending triangle, flip it, ascending triangle. And like I said, there's a lot more other patterns too. Like you got round tops, you got a round bottom, you got cup and handles, inverted cup and handles. That's a shit ton, man. So if you can just kind of like pick a couple a couple patterns that you're comfortable trading, you're good to go. You don't have to know every freaking trading pattern out there. And I know I'm repeating it over and over again, but I just want to kind of like beat it into y'all head. You don't need to know every pattern. Just like you don't need to know every candlestick setup as well too. Dojis, shooting star, three white soldiers, 3 black crows. Like there's a lot of those too. And we'll have a separate session on that. And I'll share the ones that I like. And then I'll give you resources where you can go pick the ones that you like. Right. But I'm just trying to make it, simple, stupid. You feel me? So going back to Tesla in this chart, we got one bear flag here, flagpole, another bear flag. And another thing, when you're charting these flags, you don't need to put the support and resistance, especially when you identify it, just to be a little bit quicker or whatnot. You just throw that trend line. Boom. You already know. All right, I'm looking at the price action. I know that's a flag forming. Waiting for that confirmation. Boom, it drops. Now we got another flagpole. Had a little pullback. Not necessarily a flag pattern or any type of pattern showing. Just had a little spike back, no consolidation. So this is a long flagpole. Then we finally get a little price action back, which doesn't necessarily mean it's a bear flag. You can see the difference between this pullback and that pullback to know that this is not really a bear flag. We just had a little rally here. And now what we have here is a double bottom. You got this double bottom. Let me clean this up real quick and I'll show you. New drawings. Remove drawings. Clear drawing set. Yes. All right. So if we pay attention here, we got a little double bottom action going in. Oh, 637 is my support. It bounced. Oh, market's over 1 o'clock. Market 637.50 is the first rejection at support. Bounced all the way up to 704. So we'll mark that, right? Why did they put it way up there? And I swear, boy. Anybody else having problems with Thinkorswim? The desktop version? Probably just me. Maybe easier. Boom, we got our resistance. Reject. Boom, what does it do? Find 637.51 again. Bounces off that. And now what happened? We broke resistance. Double bottom. Broke the neckline. Is it a good time to get in this trade? Maybe. Not a lot of volume, right? Did we have a little consolidation here? And we got this rip, right, at 738. What we want to see is that, it tested, it ripped through, tested support, which was previous resistance, and now we bounce, right? So if we can get above this swing right here at 739, we might be, looking at something for Tesla for next week. Run a little quick call, right? We get above this right here, hey, we might be on to something. So, double bottom, man. Another pattern that I like to trade. Let me show you example. Let me show you what a double bottom is by definition real quick. So let me double bottom pattern so you can kind of see it. So the chat's open. If you got any questions, drop it in the chat. I don't know if it's okay, double bottom. Let's pull up a nice little image of a double bottom, man, so you guys can kind of see it. All right, here we go. Got a nice little image. Let me stop streaming this. Stream this. Bada boom. Here we go. Double bottom. And these patterns, no matter if you trade in crypto, Forex, stocks, they're all the fucking same. Price action is price action. No matter where the price action coming from, price action is a price action. So you got the double bottom, you got that first bottom, bow. You got the neck, rejection at resistance, creating that second bottom, bouncing right around the same area, and then you have the breakthrough. So this neckline, this confirms when it breaks that neckline, that confirms the double bottom pattern. Again, you can jump in this play if you want to shake the dice 50-50, be like, hey, I think a double bottom is forming, and I want to jump in now. You can, and I'm not even gonna sit here and cap to y'all and make it seem like, no, I'll wait for the neckline. I'm the perfect trader. Hell no. Matter of fact, Scrappy would tell you right now, when we jumped into that Polestar play last year, when they went public with a splat, it was a double bottom forming, and we jumped in way early off the strength of that. They can do the same thing that Lucid did off that sentiment and off a technical pattern of a possible double bottom. We jumped in that play at the bottom of the double bottom pattern, and it worked for us. You know what I'm saying? I had two different strikes that was like 6 months out, and all of them hit over like 400, 500%. It worked, right? Is it going to work all the time? Hell no. We just got lucky. We took a catalyst and good news and leveraged it towards our play. Granted, the contracts we bought were not expensive. So we bought a lot of contracts, so we were able to capitalize off of it. But that was definitely a YOLO moment for us. And we'll be the first one to admit that was YOLO, right? That shit could have turned evil really quick. But it worked out. So I'm not saying that, you can't predict or foresee a pattern building out, but just be very cautious, because it easily could have did this, went up here and rejected and just went on a downtrend, especially during this market. Like, good news or not, a lot of this shit not gonna hold up in market sentiment. Amazon 20-1, if we were in a bull market and that 20-1 happened, that price would have been out of here. Like, out of here. But you're not gonna beat market sentiment. The overall market is down. You're not gonna, I don't care. Amazon could have went 100-1. It would have rallied that first day, and eventually that shit would have settled right back in with everybody else getting clapped. And that's exactly what happened with Amazon. It opened at 125, got up to almost 129, and then it joined the rest of the motherfucking clappage. So keep that in mind. Keep that in mind when you're trading these patterns, man. You want to make sure the pattern form and you get that confirmation. Here's the confirmation candle right here. You jump into here, and this is not a bad movement. These two candles right here, the strong price action right here. Hell, I mean, just looking at it just from, this could be anywhere between, I don't know, this is the daily chart. Depending on how much the price action is, I mean, it could be anywhere upwards in the 50% return. I would even go on a limb to say 100%. So depending on when you got above this neckline, right, you can gain anywhere between, let's just say 30 to 70%, just swinging these two candles and getting out at the top. So yeah, you may miss some money on the table here, but again, you didn't know this was going to happen. Again, I mean, we didn't know this was going to happen either, but this is a little bit more safer. That's basically what I'm trying to say. Just be cautious, man. Be cautious. Let's stream the chart. All right. So going back to Tesla, got that double bottom, and here we are, consolidation. Just like we saw in an example, we got the consolidation. We're waiting for the pop, right? So the question is, hey, shooter, do I get into play now to see if we're going to continue to upward? Well, we can consolidate, right? It can do one of these numbers. Right? It can do one of these numbers before it does this. Right? So, it can just bounce on this little support line, creating a resistance line at 746 before it decides to bust, or do this. So, do you get in on here? I wouldn't. You know what I'm saying? Just to be honest, because we can start consolidating, right? Unless you want to kind of YOLO it out and see what happened. But I will wait till Monday, see where we open at, see what type of energy we got. We're not even above on the RSI 50. We at 51. So we're not even in a for sure uptrend yet. So this can pull back and we can just consolidate right here at this support level before we just pick a direction. So yeah, I wouldn't pick one. That's why you get, you just figure out what your resistance support level is, and then you wait for confirmation candles. So let's break this down into a 5-minute chart, and let's find the same patterns, right? Because they are everywhere. Tesla had a good day today. I see you, Tessie. I see you, Tessie. Let's pick a different stock. Somebody drop something in the chat. What stock you want to see? Drop it in the chat, in the stocks chat. Drop it in the chat. Let me know what stock you want to see, what we want to go over. But I'm going to pick something in the meantime. Let's go pick Bay. I'm going to go ahead and pick my Bay, which is SPY. You know what I'm saying? What did Bay do today? Ooh, we got above that motherfucker, man. Hey, if you ain't check my watch list, man, and then see that analysis from Monday, that alone, you could have made some money, man. Just looking at that, I'm just putting it out there, man. I'm just putting it out there. Let's look at Bait, man. See what she did today. She gapped up. Beautiful. All right, so that's the 5-minute chart. Let's go over here, man. Strong day today. I didn't even trade today. Believe it or not. Had a lot of shit to do this morning. A lot of honey-do list stuff this morning. All right, so we're looking at the daily. They look really strong. No really patterns right here. But we did fill this gap. SPY is notorious, but should I talk about gap? I'll talk about gap real quick. I know this had nothing to do with patterns. All right, so I don't know if you guys remember, but I always talk about filling gap. You got a gap strategy. And SPY is notorious of filling gaps. And when you get these gaps, right, you get this gap down. And what I mean by gap strategy, you can kind of anticipate a stock filling a gap, and not necessarily meaning that it's going to fill the gap entirely. This is an entire gap fill right here by SPY, right? This is beautiful. This is good to see. I think SPY was up over about 2.5% today with everybody else. Everybody was twerking today. So we filled this gap right here. So what I'm looking for, this goes back to the breakthrough and retest. I'm going to look at this over the weekend. I'm going to find a support level, which I can use this little previous supply zone and say, I want to see SPY come back, test this support zone, and then bounce and go and possibly fill this gap if we continue to have that good buying pressure going into next week, right? We'll see. I'm not going to get too excited. I'm always going to wait for confirmation, see what happened. This thing can reject, and we can just be headed right back down to the bottom. But this is good to see. We filled the gap. Now we got another gap. So this is good. We filled this gap. We actually filled this small gap. We fill the second gap. That's 2 gaps out of 3. Not bad for SPY. All right, let's get to the 5-minute real quick. That 5-minute, boy. Let's see if I can find some. This is pretty much an uptrend. Let's see if I can find. Oh, this would be a perfect one. All right. So this is on, what day is this? 6/23. So yesterday. Let's try to find some bear flags or bull flags, or some bull or bear pennants. And this is off the 5-minute. All right, cool. Let me stretch this out a little bit. Make it look nice. All right. So right off the gate, I got, let's get my trend out. All right. This is a perfect bear flag. You got a flagpole, right? You got a flagpole right here. Got a strong price action. This is a supply zone too. Big sell-off, right? Then we have, what else do we have on this flagpole? We're overextended to the 9 EMA. And what I always tell you guys, and I'm always going to repeat this. Anytime we're looking at a chart together, I'm always going to beat this in y'all head. Anytime we're away from that 9 EMA, your antenna should be going up. If your inputs and you're scalping or swing trading, and you notice that we're in that 9 EMA, you need to have your antennas up and expect at some point we start traveling back to that 9 EMA. I can look at this. There's 2 times this happened on this particular move. Here and here overextended. I mean, hella overextended. We pull back to that 9. So be wary when you get into these, oh my God, did I miss out? Did I miss out on this opportunity to make some money? And you see us overextend, just know I'd rather wait to pull back to that 9 and catch the next movement. Because let's say you get on this flagpole or this price action, you get in like, oh, I'm doing puts, I'm in there. The next thing you know, you pulling back. Well, guess what? You donating money to the stock market. But anyways, I digress. Let's go back to this one. So we got this flagpole right here, overextended from the 9. Got this consolidation. If I was to bust this down in a 2 minute, we'll get a little bit more data off of it. Boom. Where my line go? Here we go. No, it's this one. I lost it. Sorry, guys. This is at 8:35. 8:35. All right, right here. So you got this pullback, right? Get a little bit more data. 2 minutes worth of data. You get a pullback, perfect pullback to the 9, and then bow, rip, pull back to the 9, bow, rip, pull back to the 9, bow, rip, just on a 2 minute. So you're gonna get a little bit more data. All right. I just want to kind of show you the significance of that bounce back. 2 minute, I like to toggle between 2 minute and 5 minute to kind of let me know how close I'm in to the 9. But I like to trade off the 5 minute because 2 minute gives me a little anxiety. It'll trick you out of a play if you ain't got that strong will. So yeah, 5 minute. So boom, got that pull back to the 9. Got this price action. When do you get into play? When do you get into put play? If I see this and this has a lot of volume, I'm a YOLO in. I ain't gonna cap. The smart play is to get in off this swing low right here, right? A swing low. You got this swing low is like the previous low that was created before it bounced and created a high. So this is your swing low, this is swing high. If this was bounce and go to an upward, you want to get in when it clears this swing high here. Get into the play. This is your swing low. The safe way to get into this play is 375.45. So you get into your put. You get in your put right there. You can get in your put as soon as you see this price action and this volume pick up. You need to put on this resistance line, which is 375.60. You definitely want to get a put after it breaks this. YOLO is getting it in on this one right here, on this candle. That's a YOLO right there. That's being bold. I'm kind of a risk taker, so if I see this happening, I'm probably gonna jump in. No cap. This is the safer one, safer candle for sure. Okay, so we got this flagpole that was created. Whoopsie. Got this flagpole created. What we get? Overextended from the 9 EMA. We get a pullback. Nice pullback, right? Peaked over the 9 a little bit. I can draw this flag out. Boy, I swear I hate this thing. Boom, another flag. All right. Got another flag here. Kind of scrunch this down. Got a confirmation, busting through the pattern. This would be a safer candlestick to get in. You just ride the wave down. Boom. Now, if you were day trading this and you got in here on this top movement, and what would be the best way to day trade this? Let's say if you bought 5 contracts, how would I play it? As soon as the rejection hit, I'll get in. As soon as it pull back, or this candle here, I'll probably sell two contracts, let it pull back, let it continue. This candle here, I'll sell another 2, then I'll let it run and run. And at the bottom of this play, as soon as it hit this pre-market low or previous pre-market high, I'll just get out the last contract. And that's how you kind of day trade that movement. So that's SPY. So let's catch SPY on the up. Let's do the call side, right? So you get this bounce here. You got your flagpole, and boom, what do you got? You got some consolidation. This is actually a pennant, right? Boom, got this bullish pennant that formed. Consolidate, and boom, price action breaks through. You get your confirmation candle. You get in on at this place to be safe. You scalp this for 10, 15 minutes. Boom. So you just got 374, 376. That's a $2 move, y'all. That's good money. It's like a 50-60% buster right there, above, plus. Get out on this candle, sell your contracts. You got to pull back. right? Pull back here to the 9. Again, what I tell you, we overextend from the 9 MA. Price action will find the 9 MA eventually. Guys, I'm not selling y'all nothing. It's right here. I'm showing you. Overextend from the 9. We pull back to the 9. Could this, I'm not saying if we pull back, we're going to continue on an upward. What I'm saying is be wary when price action get away from the 9 MA. And if you're in a call or a bullish state of mind, be wary to say, shit, I might need to take profits now because we're going to pull back to that 9. Especially if you're scalping and you want to maximize your profits, just keep that in mind. Or always keep in mind too is that if I get in this play late and I'm overextended, I need to wait for it to pull back and find support. That's a breakthrough and retest. You can use your 9 MA breakthrough retest just like you use support or resistance. Maybe I need to be a little bit patient and wait for it to pull back to the 9 and wait to see if it continues on the uptrend or if it breaks, right? Prime example. Well, let me finish talking about this one. So we pull back, and then we got, obviously, volume is slowing down because we got these small candles. Sellers are stepping in. They're trying to plan a little tug of war, trying to figure out. So it's a little choppy here, and then it picks a strong direction right before the end of the bell. All right, so you pull back. We still creating highs, creating lows, creating lower lows, higher highs. Right, that's a low, low high, higher highs. And then boom, price action rips. We find a previous resistance of day, 378. We pull back and a nice bear flag, or actually bear pennant, pull back, and we rip through, and then we find a new all-time high for the day. Then we sell off at the end of the day. So it's important to identifying bear flags and pennants. Those are going to help you out for make your trading a little bit easier. And you see them from any direction. We just talked about on the put side, you got your bears, some bear flags, and we saw some bear pennants, bear flags here. I mean bull, excuse me, upwards. Markets in the uptrend is bull. Let's pull up another stock. Let's look at another stock. Let's look at another stock. Y'all with me? If you got questions, go to the stock charts. I think the chat, far as like the voice is disabled right now, so I gotta fix that. If you got questions, just go to the stocks chat, drop them in there. While I switch and change to another company. So we did Tesla, we did SPY. Let's check out. Well, got some volatility. Let's look at NVIDIA. Let's go check out NVIDIA. Let's look at today. See what it presented us. So, all right. So there's some. It's not as many, but we have some. All right. So we had a strong day off the gate. I know y'all see it. I hope y'all see it. It's right here. All right. Let's back up. Got these things looking fat, right? Boom. Out the gate. Found the bottom. We ripped. What'd it do? Overextended from the 9. Look how far we are. Overextended from the 9. What happened? What happened, y'all? What happened? We pulled back to the 9. What did we do? What we create? Oh, there we go. Oh, bear flag. Or pennant. I mean, bear. Bull. Sorry, I've been in this market has just been so bearish. You know, seeing all this price action to the north, man, got my dang mind scrambled. So we got a bull flag or pennant. And then what we got? Crazy price action. I mean, boy. 165 up to 169. A $4 move? Sheesh. Well, that's like 100% a banger. That's a double. That's how you double your money. This is why I like scalping, right? Getting these little patterns here. Boom. Get this banger. Rip. Let me give you a little pro tip. You see this long ass wick? Right? The shadow or wick. For me, I'm staying in the play. And I'm going to wait till the second candle and see if we fill that wick. And what we do, we fill the shit out of that wick. So I definitely would have got out of here at this high. Like, no cap. Actually, I ain't gonna cap, man. If this was 100% move right here or just off this candle, I'm out the play, y'all. I'm taking my shillings. You already know the vibes. You already know how I'm rocking. Taking shillings, baby. You get 100% anything. Take that money, man. Don't be greedy. Why I can't delete this shit, bro? Thank you. All right. Let's get my trend line. All right, so we got that rip, that bull flag, rip. Look at this. This 5 minutes, this 10 minutes. The money that you make in 10 minutes. Man, don't talk to me about no savings account, champ. Anyway. Boom, what we got? We're still overextended, right? So we pull back a little bit, create another bear flag. I mean, a bull flag. Bull flag. We get a little bit more rip through. Obviously, just going to slow down because of this energy, this big candles right here, a lot of volume. Obviously, the price is going to slow down a little bit. And then we find our way back to the 9. And this is a prime example of just because we find our way back to the 9 necessarily don't mean we're not going to rip. If the buyers are not there and the sellers are dominating the buyers, then you can expect the price to kind of switch. And so after this big move, really no real opportunity as far as on the put side. I mean, you got some 1-to-1, maybe a 2-to-1 here for puts, but it ain't worth it. Honestly, if I would have traded this, I would have took profits here on this candle. And depending on how much I put in, I'm probably done for the day. Because this right here, this how far we extended from this 9. And depending on how you sized in, I'm done with the stock market because I know we're going to be on some chop suey shit. And exactly what happened. We pulled back to the 9. We closed under the 9. And we just bounced between the 9, 21, and the VWAP the whole day. Right? Really no scalping opportunities here. Just small price action. It's Friday. People that ate so good for the last couple of days. So everyone is closing out of their trades. So if you was able to catch this at bail, like you ate for the rest of the week. But that's the 5-minute chart. Let's look at the hourly chart. And you can see these opportunities everywhere. Right? Get my pointer out. Let's see. All right, so let's look at this day. Well, this is today right here. And this gray area is after hours trading. All right, I got my after hours trading on. Let me pan a little bit. All right, so on the hour chart, got the flagpole here. What we got? What we got, guys? What do we got? We got to pin it. We got to pin it, y'all. We got to pin it. I don't know why I got a lag when I do shit, bro. Shit's so annoying. Boom. Got a bull pennant. What we got here? Price action bust through, right? Bust through the pennant. This is hourly, right? So each candle is an hour worth of data of price action. We bust through, right? Is it safe to get in here? Yeah, you can get in here. Just confirmation. We break through the resistance line. But that next candle at 12, though, that end of day candle just ripped. You know what I'm saying? It opened at 169, got as low as 168, and we don't even got a wick at the top. It closed at 171. So roughly, we'll call it 168. We'll call like a $2.50 movement to end the day. But you can see these patterns on the hour chart. You can kind of see them on the 4 hour. It's very hard to see them. So 1 hour gives you a little bit more data. Obviously, boom, got the price action consolidating. Boom, rip through. Right here, flagpole, pullback. This is a flag, rip through for the day. So this pre-market. This is the reason why I look at pre-market data and I got it turned on. I got this flagpole here. I got this pullback of this bear flag. I got a rip through. I got another pullback, bear flag. What we gonna have when the market open? If it breaks through the resistance, and you got more buyers in the actual market, you got continuation. It's that easy, guys. That easy. So, moral of the story, man, find patterns that work for you. For me, I love flags, pennants, and then double bottoms or double tops. And I like cup and handles. You don't really see cup and handles a lot. Let me see if I can find a cup and handle.